Thank you, everyone who has joined already. Thank you. So please, can we do a brief introduction on the chat box? Just tell us your name and the country where you are in. Just tell us your name and the country where you are at. Your name and your country, that's all. Just we are live on YouTube. Live on YouTube. Okay, okay, awesome, awesome. Just a minute, please. Okay, I can see Jennifer Emmanuel from Nigeria. You're welcome. Somto Madueke of Canada. You're welcome. Manuel David from Buhari. You are Abuja. You're welcome. That's Nigeria. Welcome. Thank you guys for joining the group. So the training is also live on YouTube and the link has been shared on the WhatsApp platform. So welcome everyone. While we wait for others to join, we're going to dive right into the main thing for today. And to do that, I'm going to go ahead and share my screen so that we can proceed at once. Hope am I audible enough? Can you all hear me, please? Okay. Thank you very much. Empathy. Thank you. So I will go ahead and share my screen right now. Can you all see my screen? Can you all see my screen? You can unmute yourself and respond, please.
Yes, I can see it.
Okay, thank you very much. So our topic today, we're going to be looking at mutual fund investment. We're going to be looking at mutual fund investment, and this is going to be a practical exposure for investors who are interested in growing long-lasting wealth. This training today is brought to us by Merit Consult Limited, under a project called the Stress-Free Money Campaign. The Stress-Free Money Campaign. And presenting this training today is no other person than Chisom E. Anodefo, aka Mr. Investment. Thank you once again for joining. We are going to be going right into it. Like I promised, this training is going to be as practical as possible. Going to be as practical as possible so that by the end of this training tonight, you understand what mutual fund is and how you can take advantage of it to grow your wealth. So to get started, I would love to ask this question. If I should give you a choice between taking 1 million naira cash today or I giving you one naira, which will be doubled every day for the next 30 days, which one would you choose? That is, I give you an option of taking 1 million naira cash today, or instead of taking the 1 million naira, you have another option of taking one naira every day, which will be doubled. That is, you get 1 naira today, tomorrow you get 2 naira, next tomorrow you get 4 naira for the next 30 days. Which one would you choose? Can I get your comment can I get your response on the comment section? Which one would you choose between these two? Okay, Jennifer said 1 naira. Okay, okay. Can I get our response, more response, please? Between the 1 million naira cash and one naira every day, which is double, which one would you choose? Okay, that's great. That's great. Thank you for your response. Jennifer, I'm glad you chose 1 naira. Can you please tell us why you chose 1 naira every day? Can you tell us why you choose that? You can actually unmute and speak. Okay, thank you very much. Thank you very much for your response. Thank you very much for your response. The truth is, 1 naira every day doubled for the next 30 days. At the end of 30 days, you are going to be getting a little over 1 billion naira. At the end of the at the end of the 30 days, you are going to be getting over 1 billion naira. So the person that chose or the person that will be choosing 1 million naira, you have seen that it is obvious that the person who chooses one naira doubled every day. At the end of 30 days, is going to be having over 1 billion naira. You can do the math and you will see it. That is actually the power of compounding interest. And compounding interest is one of the principles behind mutual fund. It is one of the principles behind mutual fund. And that is what we are going to be exploring. That's what we are going to be exploring today. I believe you all can still hear me. I believe you all can still hear me, right?
Yes, we can hear you, sir.
Okay, thank you very much. And you can still see my screen. Okay, so why does this topic matter? Why does this? Can you see my screen?
No, we can't see it yet.
Okay, sorry about that. Let me try to solve that. Can you see my screen now?
Yes, sir. You can see it.
Okay. Sorry about that. So, why this topic matters? Many young people focus on earning and short-term earning, but not long-term investment. But without long-term mindset, earning equals to spending. And when you have a short-term mindset, it leads you to try to explore shortcut options, and we all know where shortcuts can lead someone to. That is definitely poverty. So our goal for this class is to teach you how you can be able to leverage mutual fund investment to build a long-lasting wealth. We're going to be exploring different trees under mutual fund investment. So, introduction to mutual fund investment. What does mutual fund mean? What does mutual fund mean? First of all, we need to understand what mutual fund means. Practically, mutual fund simply means pooling resources together, which is often managed by professionals whom we call fund managers. These professionals or these fund managers, they go ahead to invest those resources in assets like equity bond, treasury bills, real estate, and other financial assets. So, and this mutual fund is basically managed by investment companies and banks. That is in the case of Nigeria. It's basically managed by investment companies and mostly banks. They are the ones who manage this mutual fund. So it's like having a group of people pool their resources together. You have Mr. A bring contributing money into the mutual fund. You have Mr. B, you have Mr. C pulling money into the mutual fund. And at the end of the day, these professionals, these fund managers, they go ahead to use this fund to now invest either in equity, either in bonds, either in treasury bills, or any other asset. That is what this mutual fund is basically all about. And how does it work? Like I've said it earlier, it's about pulling resources together, pulling funds together, which these fund managers go ahead to invest in different investment options. They try to diversify this cash or this fund into different options so that at the end of the day, it can be able to yield a kind of profit that if you alone have taken that your money alone to go and invest, you will not be able to get such profit. It is just like let's say Mr. A uses 1 million naira to invest in a project. And at the end of the day, this mutual fund now, you have Mr. A, you have Mr. B, you have Mr. C. The three of them pools 1 million naira together, giving them 3 million naira. If they should use that 3 million naira and do an investment under this mutual fund, and Mr. A or let's say Mr. D on his own does not join the mutual fund and decides to use his own 1 million naira to do the investment on his own. At the end of the day, the profit that Mr. D would get using his own 1 million naira would not be would not be able to compare with the profit Mr. A will get by investing in the mutual fund together with Mr. A, Mr. B, and Mr. C. That is where the power of these pooling resources together comes to play. So, what are some of the benefits? What are some of the benefits of this mutual fund? Number one is the issue of diversification. It gives you an investor an opportunity to diversify your investment portfolio. So now you are not only putting your funds in real estate, you're not only putting your funds individually in equity or in other assets. Now you have another option of diversifying your investment portfolio. And also, secondly, we talk about the professional management. These funds, these mutual funds, are managed by seasoned investors. They are managed by professionals. So there is a lower risk of something going wrong with your investment. Another advantage of mutual fund is the affordability of the mutual fund. Most mutual funds, especially in Nigeria, most mutual funds, like for example, the one for Stanbic Bank, you can subscribe with as low as 5,000 naira. With minimum of 5,000 naira, you can start investing in mutual funds. So it is affordable. Everyone can get into it. So it is not a game for only the rich alone. And also, another advantage of this mutual fund is the liquidity nature of the mutual fund investment. It is something that you can access at any point in time. Unlike saying you are doing a fixed deposit investment that maybe you can't be able to withdraw the money for 1 year, for 6 months, for 2 years. In the case of mutual fund, you can be able to liquidate and access your money at any point in time you need it. And you can always be able to do a top up. Let's say you started your mutual fund investment journey now with say 100,000 naira. There is always room for you to top up at any point in time you want to top up. You can as well withdraw your money at any point in time you want to withdraw it. Also, another advantage of mutual fund is the compounding return, is the compounding nature of the mutual fund. So, unlike an investment, let's say for example, currently the going rate for mutual fund investment currently is between 19% to 20% annually. That is the going interest rate for mutual fund in Nigeria currently. Is between 19% to 20%, or rather 21%. So, unlike an investment where the return on your investment is fixed. Let's say, for example, you have an investment opportunity where they are telling you, okay, the return on investment is 20% per annum. It means at the end of per annum, that's at the end of 1 year, you are getting 20% of 1 million naira you invested. But in the case of mutual fund, the interest is compounded on a daily basis, or rather on a monthly basis. What do I mean by that? If your interest rate, for example, now let's say the performance is 20% per annum, and you invest 1 million naira today, it means your 1 million naira, the way it works, the way mutual fund works today, that 1 million naira, 20% of 1 million naira should be what? 200,000, right? So that 200,000 naira, or rather that 20% is going to be divided on a daily basis to know how many percent you are supposed to be earning on a daily basis. They are going to say 365 days divided by 20%, or rather 20% divided by 365 days, to know how much your interest is supposed to be on a daily basis. So let me assume, in order to explain this thing better, let me assume that the daily interest of that your 1 million naira is 1,000 naira. So it means at the end of the first day, you would see on your dashboard that your interest is now, your 1 million naira has now yielded 1,000 naira. On the second day now, that same interest rate, that same interest rate for that daily rate, it is no longer going to be calculated on the 1 million naira you invested. It is now going to be calculated on the 1,000,000 naira that is now in your account. That is, it simply means that if you are not pulling out your return, that is, if you are not pulling out your dividend, your profit, it is now being added to the capital to now calculate your interest for the following day or for the following month. So you realize that at the end of 1 year, your 1 million naira must have yielded that an interest that is greater than 20%. That is, if you do not withdraw your what? If you do not withdraw your dividends. That is how mutual fund works. That is the compounding interest nature of mutual fund. Also, this mutual fund equally has its disadvantage. It equally has its disadvantage. I would call it disadvantage. Let me not call it risk. It equally has its disadvantage. And one of the disadvantages is the market rate. That is in the sense that the interest rates on mutual funds are not stable. It is volatile, it fluctuates. It can be 19% today, tomorrow it can be 20%. Tomorrow it can be 18%. That is how it works. It fluctuates. The interest rate fluctuates. But over the past 3 years, the performance of mutual funds, it has actually been performing very, very well. That is, the interest rate have not really gone below 17% in the past 3 years. Also, there is also a liquidity restriction that is dependent on the bank or on the investment company you opened your mutual fund with. Some of them, like for example, Stanbic Bank IBTC now, they have a liquidity restriction of 1 month. If you invest now, your investment must be, that fund you invested must be at least 1 month before you can start withdrawing it. So that is the liquidity restriction on it. And also, we also have the cost and the fees. Most investment companies do charge should I call it management fee and all of that. So it means that if you are investing in mutual fund, you should equally look out for all these things before you choose an investment partner. I don't know. Hope am I making sense? Hope we are following. So one good thing about mutual fund is that you can always start small, stay consistent, and be able to grow fast. Then let's look at the Nigerian investment landscape. Let's look at the Nigerian investment landscape. Under this, we are going to be looking at the role of SEC and other regulators. You know, SEC in Nigeria simply means Security Exchange Commission. They are the ones in charge of regulating every and any investment company in Nigeria. So it means that before you invest with any company or any organization or any bank under this mutual fund, you should be able to identify or verify that such company is registered with SEC. That such company is registered with what? SEC. It gives it a level of credibility. So it is not enough for you to say, oh, the company is registered with CAC. It is not enough. Before you invest with any company or any bank under this mutual fund investment, ensure that the company is registered with what? SEC. And also look out for other regulators like the CBN. Then we also have some popular license providers of this mutual fund. Like I've always been mentioning, we have Stanbic Bank, that's Stanbic IBTC. They offer this mutual fund investment. We have a Coronation Asset, we have ARM, we have some other banks like First Bank, we have Afri Invest. Those are some of the popular licensed mutual fund investment providers. Then let's also take a quick comparison between mutual fund and savings. That is the regular savings. That is the regular bank savings with banks in Nigeria. I think this is the okay. Let me try and I'm trying to for us to do a little bit of comparison between mutual fund and your regular bank savings. 20K monthly for 5 years in your regular bank account is going to be cost to 1.2 million. While that same 20K every month in a mutual fund account can give you over 2.1 million naira. The same thing is applicable. 50K monthly for 5 years in your regular bank account is equals to 3 million. While the same 50K for 5 years in a mutual fund account is going to be giving you over 5.1 million. This is the power of mutual fund. So instead of keeping your money or saving in your regular bank account, you can take advantage of this mutual fund and be able to grow your savings, grow your investment. That is making your money work for you. Still in the comparison, let's say I decide to leave 1 million naira in my bank account, or let's say I decide to leave 1 million naira in my mutual fund account, and I say, okay, this 1 million naira, I'm not going to touch it for 1 year. At the end of 1 year, I am going to be having over 1.2 million naira in my account. The same 1 million naira, if I should leave it in my regular bank account, how much do you think I will be having at the end of 1 year? You would agree with me that at the end of 1 year, the 1 million naira might end up not even being up to 1 million naira again. Because bank charges must have eaten part of the 1 million naira. So this is the power of mutual fund. I'm sorry, I'm not actually using my system. So while I'm sharing this screen, it makes it difficult for me to view. It makes it difficult for me to view comments on the comment section. But please, we are going to have a time for question and answer. I know some of you already have some questions in your mind. At the end of this training, you will have an opportunity to ask your questions. Thank you very much. So the next thing is choosing the right partner. I know I've talked about it previously in our last slide. You should be able to ensure, first of all, you have to be able to ensure that this partner that you are choosing or this company that you are choosing, it is registered with what? SEC. You should be able to define your investment goal. What is it that you want to achieve? What is your financial goal? You should also be able to understand their fees and their charges. What are their charges like? Their management fee and all of that. What is it like? And also, you should be able to review their fund performance history, because this mutual fund investment, some companies perform higher than other companies. So you should be able to review their performance history and understand how it is before investing. Practical guide to investing. Practical guide to enable you to start this your investment journey. First of all, why do you need to invest? You need to invest because savings alone won't make you wealthy. You agree with me that inflation and nature will eat up your what? Savings. That is the more reason you need to take advantage of this mutual fund. So, what are the step-by-step guide for opening this mutual fund account? First of all, you need to identify the company you want to use to open this mutual fund account. Let me use Stanbic Bank for example. I'm always mentioning Stanbic Bank because, okay, personally, I'm using Stanbic Bank for my mutual fund investment. That's why it's more like I'm mentioning them all the time. So let me use Stanbic Bank as a case study. Let's assume you are choosing to use Stanbic Bank for your mutual fund investment. The next thing you need to do is you can either visit any Stanbic Bank branch, walk into the branch and tell them you want to open a mutual fund account. It is very easy. Or you can equally do that at the comfort of your zone. by going on their website, which I'm going to be sharing at the end of this class. You go on their website and follow the prompt. Before you know it, under few seconds, you have opened your mutual fund account. And you can also be able to work. The next thing is to fund your account. Right there in the comfort of your zone, comfort of your home, you can be able to fund your account with as low as 5,000 naira. So once you fund your account, still using Stanbic Bank as a case study, once you are able to fund your account, let's say before 12 noon Nigerian time on a working day, that same fund is going to be reflected in your mutual fund account that same day. But any money that comes in after 12 noon Nigerian time on a working day is going to reflect the following day, or rather the following working day. So after funding your account, the next thing you need to do is to be able to monitor your investment. Like the case of Stanbic Bank IBTC now, once you invest, let's say you invest 5,000, you start with 5,000 naira and you start counting today. By tomorrow, when you open your app or when you log into your account, you are going to see that your 5,000 naira is no longer 5,000 naira. Your interest, your daily interest has already been added. You might be seeing something like 5,003 naira or 5,004 naira or 5,005 naira, depending. And that is how you are going to be seeing your interest accumulating on a daily basis. Every day you open your app, you will definitely see that your money is no longer the same as it was yesterday. That is how mutual fund investment works. And then also, regularly on a weekly basis or on a monthly basis, your partners, that is, if you are using Stanbic Bank, for example, they are going to be sending you what we call mutual fund fact sheet. That is a performance history that shows how mutual fund has been able to perform for that month. So that is basically how mutual fund investment works. So to build wealth with mutual fund, you need to be able to be consistent in your investment. That is, you need to be, when I mean consistent, you need to be able to ensure, that is why you need to first of all have a financial goal. You need to have a goal that you want to achieve for yourself, say in the next 1 year, in the next 5 years, in the next 10 years. You need to have a financial goal. Let's say, for example, in the next 5 years, I want to worth 100 million naira in the next 5 years. I need to ask myself, how much am I going to be saving every month? Or how much am I going to put in my mutual fund every month that will enable me to be able to meet my target of 100 million naira at the end of 5 years? You can actually do this using a mutual fund calculator or compound interest calculator. There is a website where you can actually do this. You just need to go to the website, input the figures, and the thing will automatically compute for you. At the end of this class also, I am equally going to be sharing that website with us. So let's assume that what you need to be saving every month, or what you need to be putting into your mutual fund account every month is 100,000 naira that will enable you to achieve your financial goal at the end of 5 years. So knowing that it is 100,000 naira, you need to be able to be consistent with that 100,000 naira. You need to be disciplined enough to be putting in that 100,000 naira every month. So it means every month, depending on how your income comes. Some persons earn daily, some persons earn weekly, some persons earn monthly. So you need to structure this based on how your income comes and be consistent with it. You also need to take advantage of reinvesting your dividend. Yes, you can be able to withdraw your dividend if you want. At the end of 1 month or at the end of 1 year, you can decide to say, okay, you want to pull out your interest. Nobody is stopping you from doing that. But at the same time, leaving that dividend and reinvesting it, allowing it to also compound and yield profit, can make you to be able to achieve your financial goal faster. So You need to see mutual funds as a part of a bigger financial plan. In as much as that way, it is a low risk investment because the kind of investment where your capital is always safe. Unlike other investment options that probably you can wake up one morning, let's say for example, stock, you can wake up one morning and the prices of stock are down and it can even eat into your capital. Mutual fund is a low risk investment where your capital is 100% safe and protected. But at the same time, you should also be able to leverage other investment options aside mutual fund. That is why I said here that mutual fund is part of a bigger financial plan. Okay, activities. I think I've already talked about this. Create your plan. You need to determine how much income you earn on a monthly basis or on a weekly basis or on a daily basis. Then you need to decide how much percentage of this income do you want to put it into your mutual fund. For example, personally, I'm using 10%. I put 10% of whatever income I earn, I try to invest it into mutual fund. You can choose a percentage that works best for you. It could be 20%, it could be the same 10%, it could be 5%, so that you can be able to work, be consistent with it. Then the next step you need to take is to take a step and open a mutual fund account today. Okay, we are coming to the end of this class. We are coming to the end of this class. I know it's quite brief because I try to, as much as possible, to make it brief and to equally hit the nail on the tail. Some of the closing thoughts or some of the things you should bear in mind as we close today is that money is a tool. You need to use it wisely. And also you need to be able to start from where you are today, with what you have, and your future self will equally what thank you for taking that bold step. Money is like a seed. Plant it today. Don't eat it. Also, your future self is counting on what you do today. Start now, earn smartly, save ruggedly, and invest wisely. There is a saying that the best time to invest was yesterday. Another best time to invest is what? Today. So take take action today and invest, start your investment journey with your. Okay, you can also connect with me online. I'm available on all social media platforms: Facebook, Instagram, LinkedIn, Twitter. That is S, and the names showing on the screen are my username on all the social media platforms. On Facebook, it is Chisom E Anolefo. On Instagram, it is Chisom E Anolefo, no gap. On LinkedIn, it is Emmanuel Chisom Anolefo. On X, it is Mr. Investment underscore 95. I would also encourage you to follow our YouTube channel or my YouTube channel, Stress Free Money Zone. Just go on YouTube and search for Stress Free Money Zone. I usually drop video tips around investment and drop tips around how you can be able to live a financially stress-free life. I try to do talks on stock market investments, mutual fund, and all of that. And I drop it on the YouTube channel, so you can do well to subscribe and follow our channel for more tips. So that brings us to the end of this class today, and it's time for questions and answer. So I don't know if you have enjoyed this section. If you have enjoyed this section so far, you can react with your favorite emoji. Thank you for participating so far. We have come to the end of this class. If you have any question, you can drop on the chat box or you can unmute yourself and ask your questions. If you have any question, you can drop on the chat box, or you can unmute yourself and speak. Thank you, Jennifer. Thank you. Okay, I see the class was very, very clear because I'm not getting any question. Okay, before we okay, Jennifer says I don't have any question for now. Thank you very much. I'm glad it means all what I said was understood perfectly. Okay, before we go, those of us who are interested in using Stanbic Bank IBTC, on the screen, I hope we can all see the screen. On the screen, you can see the link. You can see the link for you to open your Stanbic Bank IBTC mutual fund account. You can use this link to open your Stanbic IBTC mutual fund account. This link will also be dropped in the WhatsApp group. For those of us that are interested in using Stanbic, if you are interested in using Stanbic, this is the link you can use. At the end of this class, it will equally be dropped on the WhatsApp platform. So thank you very much for joining. Thank you for your time. We have actually come to the end of this class today. Thank you so much. And to enjoy this class, can I see your favorite emoji? Wow, wow. Thank you very much. Thank you very much for joining. Thank you very much for joining. So this is the end of this class today. I appreciate you all and I'm hoping to see you all at the top. Do well to start your investment journey today and take advantage of the mutual fund to grow your wealth. Thank you very much and do have a lovely weekend ahead. Bye.